Hi, this is Kristin coming to you from Gunderson's Bookkeeping, and today we are going to be covering accounts receivable. Do you ever wonder why it's so important to manage your accounts receivable? Do you ever wonder why you have items that are in your undeposited funds, or wonder why you have an accounts receivable balance that's still outstanding where you know that they have paid that, but you just don't understand why it's not correct? So if any of those questions, or wonder what the difference is between accounts receivable or sales receipts, how to make bank deposits, if this is you, this is the training for you to watch. Okay, so I am going to go ahead and go to the next page. So a wow fact for you is that according to the Harvard Business Review, here's an average of what the receivables cost your company. If they are 30 days out, it's costing your company 1.82%. If your accounts receivable are 60 days out, it is costing you 9.2% of that accounts receivable. 90 days out, it's 17.74%, and 120 days out, it's 26.71%. So this is huge. We want to make sure that we're getting our accounts receivable as soon as possible. And the other thing that you need to realize is that the farther out the accounts receivable is, the harder it is going to be for you to collect on that money. There's a bigger and bigger chance each day that goes past 90 that you will not even collect that accounts receivable. So let's go ahead and jump into our QuickBooks sample company, Craig's sample company. And where we want to go to look at our customers is under sales and customers. And I'm just going to give you a really quick tour of what it looks like in the accounting in your customer section. So Amy's Bird Sanctuary. If we want to go into Amy's Bird Sanctuary, here's all of her information. If we want to add notes like this is a really good spot if you are doing collections. So we'll put 11, 14, 19. There's a balance of $239 on invoice 1021. So just pretend that we called on that today. Called Amy. She is putting a check in the mail for invoice 1021. We should receive it. If we don't receive it, I before E except after C. If we don't receive it by Tuesday, whatever that date is, let's call again. And then we have that note in there that we know when we have taken care of our accounts receivable. So that's a tip for you. If we need to go ahead and change anything, like say we've been sending it to this email address all along and we really need to send it to an accounts payable department, we could do that. Here's our notes again. If the customer is taxable, say we want to put say we are going to start emailing her. So I'm going to do send later. That means that we're going to email it. If it was print later, that means it's going to print it out. Terms, we're going to change her to net 10. That way, hopefully she'll start paying us faster. Okay, awesome. So if we wanted to add a mobile phone number or their website, anything, that's where we go to do that. If we need to add a brand new client, we go, or if we wanted to go ahead and send her a new invoice, this is where we would do it right here. We can create an estimate for her. We can create an invoice for her. We could do it from there. Otherwise, the other place that we can add an invoice is up here at the plus sign under customers invoice. And then here's where we type in the customer name. So we're just going to play with Amy's Bird Sanctuary again. It changed it to net 20 or net 10, I mean. And then we can pick our products and our services. So say that we did some gardening for her. It's a weekly charge and we charge her, I don't know, $100 a week. We go ahead and add that. And then if we do save and send, it's automatically going to send her the email that we have. And if you need to know how to set up your email, if you want to change the words, if you want to change how your invoice looks, we have covered this a few weeks ago on the setting up portion of QuickBooks Online. So if you need that, go back and watch that. And then we save and send it. So we got an invoice out. Say we want to add a new customer. We'd go over here to the sales again. Here's the customer. And right here, this toolbar right here, it shows you what's been paid in the last 12 or 30 days. There's been 12 invoices paid. If you click here, it will show you what's been paid recently. If you want to see the open invoices, this is really key. These are ones that have not been paid. And from right here, we can easily, say we want to do Bill's wind surf shop. There's one invoice. What we can do is right from here, we can send him a reminder that says, hey, just we have not received an invoice. Let us know if you have any questions, and it will automatically send that invoice again. So this is an easy way to resend those invoices. And we especially want to do that for the ones that are overdue. We want to be doing this every Monday or Tuesday, sending these invoices out as a reminder. So I already sent bills. Let's send this one out, send reminder. And we're just going to keep on sending these out, because the more often that we, and then I'll see over here where it says just send reminder. And then let's drill into this pending invoice right here. This is the one that's overdue. So here's, if we wanted to go ahead and call on it, we could call on it. And then we want to make sure that we put the notes right in here. Okay, so going back to our sales and customers, just wanted you to see that. Say we have to go ahead and add a new customer, and we're going to send them a invoice, or we're going to send them a quote. So Bob's Barbecue. We're going to put in, oh, look at that, Big Bob's Barbecue. So this one's already in here, or it automatically came up because, you know, we are on QuickBooks Online, so it can automatically search for items. So according to the internet, this is what's already in here, has a phone number and everything. So we're going to go ahead and save this. And now say we wanted to go ahead and create an estimate for them. Too bad we don't have their email. So we're going to have to, if we had their email, we could send it directly to them. Say they want a rock fountain. So we're going to have to go ahead and print this and mail it to them. save and close. And then say they call us back and they're like, yes, let's go ahead and do it. All we need to do is hit the create invoice. If we need to change anything, we could change something. We could change the terms right here. And then we'll just hit save and close because we don't have their email address. Not that this is a real company or anything. So here we'll show you the estimate and then the invoice, okay? So now what we could do is we can say they call us up and they're like, yeah, we want to go ahead and pay that right now. If we were in this section right here, we can automatically go to receive payment, or say we are, we just get the phone call. We're just working in the company and they call. So we can go over here to this plus sign and go over here to receive payment. Here we will have to know the customer name. So I think it was, Big Bob's Barbecue. And I don't expect you to have instant payments. That is, this is probably more like a week later or whatever. But say they are paying with a, say they're paying with a credit card. We'll say Discover card. We always want, okay, this is key. Deposit to direct deposit, okay? You know what, let's go ahead and say that they're gonna pay with a check. And here's where we put the check number. And we always want to go to direct to undeposited funds. Because if we click the checking account right away, yes, it gets automatically deposited there. But say if we have 3 checks and maybe some petty cash that that came in today, and we want to make that deposit, it will not work. Reconciling your bank account will be very, very difficult because you have, 3 different checks in there, each has its own deposit. And when we deposited the deposit to the bank, we wrote all of that in one bank statement or one deposit slip, and it's going to show up one time for all 3 of these checks that we're getting in on the bank statement. So we really want to, I really want to hone that in here. So we want this to go to undeposited funds. And we received the whole $297. And then save and close. And then we also went and picked up the mail today. That one was dropped off by a check. They came by and dropped off. But then we went to the mail and we got a few more checks in. So I go to receive payments again. And Amy's Bird Sanctuary came in. We want to make sure we have the correct date that we received it. They paid with a check. That's the check number. Again, we are depositing to undeposited funds. And then they paid $339. And you'll see how it automatically, it uses its smarts to figure out which ones to apply it to. I'm going to unclick this real quick though. I want to show you, say they only paid $100. Normally it will be smart and it will automatically apply it to the open invoice that's for $100. But you want to make sure that if there are invoice numbers written on the check stub, the statement, that you apply the check to where they are paying the money to. So say they paid the full $339 that's due. And right now it's just being a little stubborn because I unclicked it. But say it's showing you have a credit right here. It's because it's not all applied. So we want to make sure that we have this clicked here too. And then there's no credit. Okay. So then we're going to go, and actually we have one more check. So we can do this green button and we're going to go save and new. And then who else paid? Bill's Windsurf Shop. Remember, we just sent them a reminder, so now they're paying. So they're paying with a check. And they're paying the whole, say they only pay $70. I don't know why they're only paying $70, but that's all they're paying. It will apply what it can right here. You see how that is over here. I'm going to put that they paid the whole $85. And I'm going to save and close because that's the last check that I received in the mail today. So now, because tomorrow's Friday and we go to the bank every single Friday, what I'm going to do is I'm going to write out, I have these 3 checks that came in the mail or, you know, that are in the office that I need to go deposit to the banks. Okay. So I'm going to write out my, you know, I'm going to write on the back of it. I'm going to endorse the back of it. I'm going to fill out the deposit form. And now I need to deposit into the bank. So I'm going to run it to the bank, but I also need to deposit into the bank in QuickBooks. So what I'm going to do is the plus sign, and I'm going to do bank deposit. And actually, we have more money. So we have these 3 checks that have come in today, but say earlier in the week, I know it's a 19 date, but there's no reason why I went to deposit these already. Say on Monday, these 2 checks came in, but we only go to the bank once a week. So I'm going to deposit all of these. So on my deposit slip, my total deposit should equal the $2,783.52. Okay. Up here, I'm double checking that the date is correct. Yes, it's the 14th today. This is when I'm going to deposit, and I'm depositing it all into the checking account. If you have more than one checking account, or say you want to put some of it into the savings or something, what you would do, say this big $1,600 check, we want to put that into the savings, but all the rest of these 4 are going into the checking account. So the deposit would be $1,108 going into that account, and then I'm going to do save and new. And then there should be this 1 check left from Cool Cars for the $1,600, and I actually want to put that into my savings account because I need to build a buffer. Okay. And this is just play. So I'm going to hit the deposit. So now into my savings account deposit slip, I should have this $16.75.52, and then I'm going to do save and close. All right, so now let me look at I'm going to go to reports. I'm going to go to balance sheet. As of today's date, I'm going to put it in cash basis, and I'm going to hit run. And this is how much money I have in my checking account and my savings account. And we can click into this. I want to click into this, the savings account, because I want to show you that, you see right here, here's the deposit from the Cool Cars that I deposited today. So before that, I only had $800. And then let's look at the checking account. So I just want to show you, here's the deposit from today. It has it split out because it's the 3 checks that are going in as one, but here's the total deposit amount that we put in there today. Another report I want to show you real quick. Actually, let's go back to the balance sheet. Accounts receivable. Our accounts receivable should equal $4,957.52, okay? I want to know what that's made up of. So what I'm going to do is I'm going to go to accounts receivable, or to the reports, and then accounts receivable aging summary. This ties to the balance sheet, which is great. But here's a list of everyone that owes us money, okay? So this is what we want to be calling on every Monday, sending reminders that they owe you money. And then I want to show you one other thing, because there's a difference between accounts receivable, like having an invoice, receiving the payment, and making the deposit. That's a 3-step process. The other thing I wanted to talk about is the sales receipt. Okay, say you have a random person that comes in and she wants to buy something from you. So I'm going to go up here to the plus sign. So instead of sending them an invoice and then mailing it or emailing it to them, and then they're going to mail you back a check or pay with credit card, they are right there in the store and they want to pay for something right now. So that is called a sales receipt. And when you go to the plus sign, sales receipt, and then we would put in the customer. If we need to type in a new customer, we can type in a new customer right here. Let's say Diego Rodriguez comes in, and actually he's going to be paying with a credit card. No, we'll just say check. Or you know what? Let's say he's paying with cash, because we do need to be recording the cash payments that come in also. There's no reference number because, but again, this is going to go to undeposited funds. Let's find something that we can imagine him buying really quick. Let's say he bought he bought some design rocks for his garden, and he is going to go home and deposit, do the gardening himself, but he came in and bought the rocks, like a load of rocks from you. So it's $150. He's paying with cash. We might have to charge sales tax on this. Say it's 8% sales tax because we're in California. And then if we want to send him a receipt that he paid for this, his email's up here. We can either print this receipt for him, or we can just do save and send. He's like, I don't need a piece of paper, just send me it through email. We'll do save and send. Okay. And then say we go to the bank account again. Hey Megan, how the heck are you? And we get another check that comes in the mail for an invoice. Say Jeff pays. So I'm going to do receive payment because he's paying with a check. We know that we have that invoice out there. Jeff, he's paying with a check. Again, we want to make sure this is undeposited funds, and he's only paying partial. Like he can only afford the $50. He's on some hard times. So we're going to leave this. There's still going to be an open balance of $31 when we're done with this. We're going to do save and close. And I want you to see on the accounts receivable now he only owes us that $31. So just wanted to show that and how that affects that. So now, say we're going to go to the bank again tomorrow. So we're here, and we're going to do bank deposit. And we have the sales receipt from Diego, the cash, and we also have the Jeff check, okay? Do we have a petty cash set up? No. What we could do is we could leave Diego's in a petty cash account if we wanted to. But just say we're going to deposit all of this into the bank account. And I want this to go into the checking again. So the deposit slip's going to be $212, and it's all going into the checking account. Okay, we don't keep any petty cash on hand because we just don't do that. So save and close. So we just have gone over the difference between accounts invoicing, the received payment, and the bank deposit, and then also when we have a sales receipt. And it doesn't matter if it's a sales receipt or received payment, we can deposit them both at the same time. All right, that is enough for today. If you have any questions, or if you're having any problems, or you know that something's wrong, go ahead and put them in the comments, and we will address that next week. This is a 2-week portion on accounts receivable. We still need to cover credits and partial payments, and if you're going to write things off. But I would love to know if you have any questions from this. Go ahead and either comment or reach out to us, and we will be glad to cover them in next week's class. Thank you. Have a great day.